Good evening, and thank you all for coming at very short notice to this very important event. It's a sign of its significance, the importance of the issue, the importance of our speaker tonight, that we've been able to command so good an audience at this particular moment to listen to our guest speaker. It's a hugely important subject, and it's of particular significance because, of course, two very big beasts, Lord Heseltine and Lord Mandelson, apparently failed in their time to achieve what they wanted in this critical area of policy. And it's a sign of the character and the rigour of our guest speaker tonight, whom I've had the pleasure of knowing for many years, that quite undaunted, he'd be willing to take on this challenge. Michael, welcome here. I think it's your first time on our platform in your current portfolio. Particular welcome also to Joel Hills of Sky News, who's going to chair the event tonight. And I think everyone here will very much look forward to hearing what you have to say in your customary punchy and rigorous style. Thank you.
So, for sale, the oldest postal service in the world. Yes, ladies and gentlemen, and it's profitable. It comes complete with 150,000 staff, a particularly feisty union, just to make things interesting. And Michael Fallon is about to tell us just why, when, and how the government plans to get shot, sell on, Royal Mail. Ladies and gentlemen, Mr. Michael Fallon.
Well, thank you very much, and good evening. This financial year is going to be a milestone in Royal Mail's history. Royal Mail has been in public ownership since 1635, as a government department, as a public corporation, and as it is now, a publicly owned company. As I informed Parliament last week, the government this financial year intends to give Royal Mail access to the capital and commercial disciplines that it needs to have a sustainable future in a rapidly changing postal market. We're going to give it commercial freedom by selling shares in the company. A thriving Royal Mail allows government to achieve its overarching objective of the postal market reforms, which is securing the universal postal service on a long-term basis. The 6 days a week service at uniform, affordable prices that delivers throughout the UK. A service that is vital to both consumers and businesses and the British economy. This evening I want to explain how we've reached this point. I will cover the recent history that showed that we needed action. I will tell you what action the government has taken so far. I will refer to what's happening in the postal market here and internationally. And I will set out why Parliament has decided that a share sale and an employee share scheme are necessary for the long-term success of the Royal Mail and the Universal Service. I will also say a little of where we are and the options and preparations for the sale, and finally I will dispel some of the myths about the possible impact of this sale. Let me start with the recent history. The origins of our reforms go back to the middle of the last decade, when mail volumes began to fall in spite of a growing economy. Previously, the two had been closely linked. The overriding reason for this fall was, of course, the increased use of electronic communications to replace letters. Businesses were using other means to reach their customers. The internet and email were cheaper and more immediate. These developments prompted the Labour government in 2007 to commission a review of the postal sector led by Richard Hooper to look at how the universal service could be maintained. Richard's interim report in May 2008 confirmed that the postal market faced an uncertain future, that there was a substantial threat to Royal Mail's financial stability, and that the universal service was also under threat. There was a broad consensus that Richard's analysis demanded action. As he put it in that interim report, the status quo was not tenable. The full report was published in December 2008 aptly titled Modernise or Decline, and the three main recommendations were that responsibility for postal regulation should transfer to Ofcom, as postal services were part of the wider communications sector, now having to compete with electronic communications. Second, the government should tackle Royal Mail's historic pension deficit, as it placed an enormous financial burden on the company and made its balance sheet insolvent. And thirdly, that Royal Mail should enter into a strategic partnership with one or more private sector companies to give it commercial confidence, access to capital, and corporate experience. The Labour government accepted those recommendations in full and introduced a bill in Parliament in 2009 to implement. This permitted a sale of the minority of Royal Mail shares, as well as regulatory changes, and allowed government to take on Royal Mail's historic pension deficit. This bill passed through the Lords, but was dropped in July 2009 because, and I quote Lord Mandelson, market conditions made it impossible to conclude the process to identify a partner for the Royal Mail on terms that we can be confident would secure value for the taxpayer. And that's where the matter rested until this government picked up the baton in 2010. We asked Richard Hooper to update his report. He confirmed that the challenges he identified 2 years ago remained. There continued to be a need for action to remove the threat to the universal service. He again recommended the need for regulatory change and for government to relieve Royal Mail of its historic pension deficit. Given changes to the management at Royal Mail, he concluded that Royal Mail no longer needed access to corporate experience through a partnership, but reiterated strongly that Royal Mail should have access to private sector capital. He believed that private sector capital would ensure that Royal Mail had the cash available when needed to finance accelerated modernisation. It would inject private sector disciplines into the business, reduce the risk of political interference in commercial decisions, and encourage Royal Mail to develop a more customer-focused commercial strategy and diversification for the digital age. The government acted swiftly. We introduced a bill in December 2010, within the same year of election, to enable implementation of the Hooper recommendations. And that bill, the Postal Services Bill, became the Postal Services Act in June 2011. Now, what have we done so far? We have not left the powers in that Act unused. In October 2011, Ofcom was empowered as the postal regulator with a clear primary duty to ensure the provision of the Universal Postal Service. We underpinned this duty by requiring Ofcom to perform its duty with due regard to the financial sustainability of the Universal Postal Service, and that includes the need for any universal service provider to receive a reasonable commercial rate of return for the provision of the service. In March 2012, Ofcom set the regulatory regime for the next 7 years. This regime gave Royal Mail more competitive freedom. It removed price controls from first-class stamps while placing a cap of 55 pence on second-class mail. Royal Mail's unregulated prices will also need to be competitive as it continues to face pressure from other postal operators, especially in the parcels market and from electronic communications. The new regulatory regime puts in place the key elements for the next 7 years. That stability allows Royal Mail to plan properly, to set prices to reflect its costs, and to grow. Also in March 2012, the government relieved Royal Mail of its historic pension deficit. This required state aid approval, and around 40 billion of liabilities have now been passed to a new statutory pension scheme. This preserves the benefits for retired employees and the accrued pension rights of current and former employees. There have been suggestions that we had some kind of ulterior motive for taking around 28 billion worth of assets from the pension funds. We have been completely open and transparent about this. We have not made a profit on the deal, as we are committed to meeting the costs of the transferred liabilities. The recently published Royal Mail Statutory Pension Scheme estimates show that the cost of the statutory scheme will be around 1.3 billion in this financial year alone. So the action we've taken on regulation and on pensions combined with Royal Mail's modernisation programme, has already produced results. Royal Mail is recovering strongly and delivering positive free cash flow in 2011-12 and did so at the half year for 2012-13. Its core UK letters and parcels business returned a profit of 99 million in the first 6 months of the financial year, compared to a 41 million loss a year earlier. Overall, the company made profits of 144 million in the first 6 months. We have also separated Royal Mail and the Post Office. They are distinct businesses and should operate independently. The Post Office has now been equipped with an independent board so that it has the freedom to develop and implement strategies to grow its revenues and to transform its network. We've provided 1.34 billion for this transformation and insisted that the Post Office must maintain 11,500 branches. There will be no closure programme under this government. We want the network to be successful, and to do that, it must also modernise and become more efficient. We remain committed to seeing real progress towards the mutualisation of the Post Office by the end of this Parliament. The final phase of our reforms, then, is the sale of Royal Mail shares. This will be the route that will enable future access to private capitals. This is the way to put Royal Mail's future onto a long-term sustainable basis. Indeed, if you look at Europe, you will see that leading postal operators who provide the same universal postal services in their respective countries have already now moved into the private sector, and they've been successful. For example, Austria Post and Deutsche Post have delivered consistently high mail profitability since their flotations. Their profit margins in 11-12 were 22% and 8% respectively. Deutsche Post is perceived as being at the vanguard of digital transition with innovative packets, e-retail and hybrid mail products. bpost in Belgium has, since securing private capital in 2006, returned to profitability and has a profit margin of 15.2%. PostNL in the Netherlands has delivered sustained high profitability since its privatisation and is now dealing with some of the most difficult market conditions in Europe through restructuring. Furthermore, levels of service have remained consistently high. For example, in 2012, the percentage of letters delivered the next day in Germany and Austria was 95%, compared to our regulatory target here of 93%. Other member states in the Union are also considering a change of ownership in Spain, in Portugal, and Scandinavia. I mention these developments to emphasise that our intention to sell Royal Mail shares is by no means unique. And it's a decision that is not based on ideology. It will be a practical, logical, and commercial decision. And very few people now question whether the likes of BT, BP, or Rolls-Royce should ever have remained state-owned. The European postal market is now fully liberalised. It's a commercial market, and one I believe that is best served by fully commercial companies with the freedom to operate on a fully commercial basis. That will mean that postal services will be run efficiently and effectively, and that should benefit all postal users and ensure that universal postal services can be maintained. Royal Mail is now one of the largest companies in the United Kingdom, employing, as you said, over 150,000 people with a turnover exceeding £9 billion. A company of this size and importance to the British economy should be able to access flexible capital, and it will need future access to private sector capital so that it can continue to modernise and become more efficient and competitive, that it can innovate and invest and seize opportunities presented by new markets like the rapid growth of online shopping. It makes no sense at all for Royal Mail to have to compete for scarce public capital against other services such as schools and hospitals. Unless Royal Mail has the capability in future to access equity markets, every pound that it borrows is another pound on the national debt. No responsible party could propose that in the current environment, or for that matter in any environment, when Royal Mail, run on a fully commercial basis, has the capacity to be cash generative, to be profitable, and to be perfectly able to raise the capital it needs from the private sector. But there are other reasons for a sale as well. As Richard Hooper laid out, private capital will bring with it commercial disciplines. It will ensure that the onus is on providing services that are efficient, that are customer-focused, and that meet the needs of businesses and social users. That in turn will deliver enhanced profits and cash flows to fund future growth. A sale of shares will also reduce the possibility of a future government's interference in the operations of the company. We want to give the board the same freedom that other major British companies have. This is the time now for the government to step back from Royal Mail and allow its management to focus wholeheartedly on growing the business and planning the future. It is this government, therefore, that will give Royal Mail the real commercial freedom that it has needed for so long. Now, the Postal Services Act 2011 lifted the restriction on the sale of Royal Mail shares. As we made clear during the passage of the bill, we didn't want to be tied down at that point to a specific type of sale or to any artificial deadline. In this way, we can ensure the best value for money for the taxpayer. Since then, we've continued to consider carefully the options for a sale. There are variations and different on these themes, but the broad options are an initial public offering or a private sale. Both those offerings remain on the table. In my update to Parliament last week, I said that we've received positive feedback from investors so far. That should be no surprise. Royal Mail is the leading parcels business in the UK, successfully leveraging its network to meet the needs of a fast-growing e-fulfillment sector, with Parcelforce complementing that with a highly successful express business. There's a growth story here. According to the April 2013 Interactive Media in Retail Group Capgemini e-sales index, online sales increased 16% over the 12-month period. That group estimates that the e-fulfillment market is £76 billion in Britain, and that cross-border sales are set to reach £36 billion this year. In 2011, 2/3 of consumers receive one or more parcels each month, and that trend is continuing. All of that points to a tremendous opportunity for Royal Mail, and its new strategy is now fully aligned to customer needs, with product innovation only now possible because of the removal of the previous regulatory straitjacket. Royal Mail has grown its revenues, its profits, and its cash, and it also has a highly successful European parcels business in GLS. I said in my update that the government was attracted to an IPO, and in the coming months we are exploring this further. There has already been press coverage about government and Royal Mail appointing advisors to take forward a sale. We will soon be issuing a tender for the procurement of a syndicate of banks that, if this is the safe sale route chosen, that will execute a sale of shares. We expect to make initial appointments by the end of May, and at the same time, Royal Mail will also be exploring access to external capital with the debt markets. I can also state categorically that we have no intention of selling off Royal Mail cheaply. We have not publicly speculated about Royal Mail's value. We will sell shares in Royal Mail at a fair commercial price that represents value for money for the taxpayer. And when a decision is made on the type and timing of a sale, we will report that to Parliament. So both options for a sale remain on the table. I would like now and finally to turn to something that is unique in the Royal Mail transaction. In the Postal Services Act, Parliament decided that employees of Royal Mail should share in its success. The Act requires that at least 10% of Royal Mail shares should be made available to an employee share scheme, the largest statutory commitment of any major privatisation. We are now starting to design a share scheme that will give postmen and women throughout the country a chance to own shares in Royal Mail. I have regular meetings with the CWU, and I have been encouraging them to engage with us on the structure and terms of the employee share scheme. I strongly believe that employees should share in the company's future success and in the dividends that flow from that. I would urge the CWU to put ideology aside and take up that invitation so that their members do not lose out. As the recent Nuttall review on employer ownership shows, employee-owned or part-owned businesses have greater economic strength, a happier workforce, and higher profitability. I want to make sure that the scheme is as attractive as possible, and I'm looking at options for the employee share scheme, but again, no decisions have been made yet as to the shape of the scheme, and that, of course, in itself depends on the kind of overall sales process that we undertake. Royal Mail staff spend their working lives making the post run on time, delivering to far-flung parts of the country from Land's End to John O'Groats, and they are absolutely central to the future success of this company. People should be in no doubt whether the shares are discounted or free. It is a hugely significant commitment from the government to Royal Mail's workers, and I'm determined to do the right deal by them. The number of employees who will potentially benefit from a scheme will be the largest for over 25 years, and it is our intention to have such a scheme in place at the time we conduct a sale of Royal Mail shares. Very finally, before I close, I'd like to dispel some of the myths that have been circulating about the sale of Royal Mail shares. A change of ownership in Royal Mail will not mean that Royal Mail can stop delivering to rural areas. Royal Mail will remain the United Kingdom's designated universal postal service provider, and it must continue to provide a 6-day-week service throughout the UK, whatever its ownership. Ownership change will not mean that the Royal Mail will no longer provide free services for the blind. Royal Mail has to provide these services, which again are enshrined in the Postal Services Act as one of the minimum requirements of the universal service. These are requirements that could only be changed by a subsequent act of Parliament. It's also been suggested that free services for the armed forces would be stopped. These free services are available to servicemen and women who are on operations such as those in Afghanistan. The Ministry of Defence fully reimburses Royal Mail for the provision of these services, and again, that has nothing to do with ownership. Furthermore, a change in ownership will not lead to VAT being added to stamp prices. First and second class stamps are exempt from VAT as part of the one price goes anywhere universal service. Stamp prices for the Universal Postal Service will still be regulated by Ofcom, which has a duty to ensure that they remain affordable. People peddling these myths are seeking to play on the fears of communities, and there isn't a scrap of truth in any of them. I certainly accept that some people, some organisations are entitled to oppose a sale for ideological reasons, but trying to win support through this kind of untruthful scaremongering is unhelpful if it ends up depriving Royal Mail employees of the chance of getting a stake in their business. As I said earlier, this is a historic year for Royal Mail. We aim to take forward a sale of shares. Alongside the sale, we'll put in place arrangements for an employee share scheme, which Parliament decided in 2011 should be at least 10% of the company. It would be wrong if we proceed with an initial public offering to deny employees a stake in the company any longer. The action we've taken so far and the steps we will take to give Royal Mail access to private sector capital will ensure that Royal Mail has a sustainable and viable long-term future. And most importantly, that will also ensure that we can all continue to have access to a high-quality universal postal service. Thank you.
going to go into a Q&A session in just a minute. I have a few questions, and I'll set the ball rolling, and I'll throw it into the floor. Before we do that, I want to get a sense of the mood in the room. Perhaps you've changed your opinion about what you think Royal Mail's future should be. But, I mean, broadly speaking, could you raise your hand if you think the privatisation of Royal Mail is basically a thumpingly good idea? Civil servants, you don't have to say that. Okay, and if you oppose it with every sinew of your, no, a few, a handful. Okay, and presumably the others undecided or unwilling to express an opinion. Michael, you said the business case here for the privatisation of Royal Mail. You say it will help modernisation, it will make it more efficient, it will help it to innovate and invest. But a company doesn't have to be in the private sector for those things to happen, does it? This is ideological.
No, it's the reverse of ideological. It would be ideological to say that the company can't access private capital. The only way it could otherwise access capital would be to borrow, which would add to the government's borrowing requirement. And that is simply not logical at a time like this when we're trying to reduce the public sector borrowing, to come forward and say we need to borrow more for the Royal Mail at a time when we need to finance everything else, schools and hospitals, infrastructure investment, simply wouldn't be logical. The private capital is out there. Royal management have been out and talked to potential investors. People are ready and willing to invest in this company. It would be completely ideological, I think, to stop them from doing so.
Okay, but you make the point here, this is about providing a long-term sustainable future. You also quite rightly point to the fact that this is a company that is profitable again, that is meeting its service requirements, that is well run, that is no longer burdened by a pension scheme which was really causing it all kinds of problems. It's in good shape. It doesn't need to be returned to the board. Why can't it thrive in state ownership?
Well, it's in better shape thanks to a lot of hard work, particularly by Post Office management and the new team that I want to agree, and also through the efforts of those who work for it. In fact, we put up a lot of change as the delivery and sorting officers have been modernised, and I pay tribute to all of it. But the business has to go on being successful, and we can't rely on a single year or whatever. The marketplace it serves continues to change. That's why it has to have access to new capital, to continue to innovate, to automate, to meet changing needs.
So that's the key thing, it's access to capital. That's the commercial freedom you're talking about. Because Royal Mail, I mean, is commercially free, isn't it? I mean, it can set its own prices, we know that, because we now pay 60 pence for a first class now.
That is one key to allow it to access to capital. But the other is what the law says. The law says the staff should have a stake in this business. And I think it would be ideological to deny them that share any longer. That was 2 years ago this was passed, saying the staff should have 10% of this company. And I want to put that into effect.
Okay, can we just be clear on that issue about the staff ownership? Would staff still be entitled to that 10% stake if there were a wholly private sale? If there wasn't an IPO, if you decided to sell it to a private buyer, would staff be still entitled to that 10% stake?
They're entitled to a 10% stake at the point at which government sells its final share, right? So it would be perfectly possible, if it wasn't an initial public offering, for the government to sell a part of Royal Mail to an individual private buyer, for example, one of the other postal services in Europe.
A private equity company?
Not necessarily private equity, but it would be perfectly possible for the government to sell a small piece of Royal Mail without triggering this. But I don't want to do that. I want to make sure that the people who work for Royal Mail share in its success, as Parliament decided 2 years ago, and I want to, if I can, to put that into effect right at the beginning of the process. Now, that does depend, and you put your finger on it, it does depend, of course, on us going the public offering route. We'll be able then to do this up front.
And that's your preference, isn't it? You say you're open to all ideas, but
that is my preference. Now, of course, it does depend on a lot of other things. It depends on continuing success of the modernisation programme, the progress they're making month by month, and of course it also depends on the markets being open. They may be open at the moment. Who knows where they'll be later in the year? It
just occurs to me, why is it, as it stands, your preference is to be 100%, I keep using the word shot, it's very unfair, but you're 100% free from all, you want the whole of the company first.
You say that.
You don't want to
own the scheme implemented, if we can. I don't think there's any point saying, right, the government is selling 10% of the Royal Mail, say to Deutsche Post, therefore we'll only implement 1% of the employee share scheme.
Yeah.
My preference would be to get 10% of the company into the hands of the staff as soon as we can.
But you don't want the government to retain access.
No, well, we haven't taken a final decision on the size of the statement. The government will sell, or the type of transaction, or the timing, or the exact nature.
So could it be then that we were in a position, rather like the previous government, where actually the stake that is up for sale is as small as 30%, that the government would just retain a sizable stake?
We haven't taken a decision on that yet. That will depend, as I say, on the continuing progress that Royal Mail makes. It will also, of course, depend on the appetite of investors and people who are ready to buy this.
And what about on that point? What about selling?
We're definitely going to sell a certain fixed percentage.
Okay, that's interesting, because I rather assumed you didn't want any skin in the game anymore. But in terms of what investors are telling you, what your advisors are telling you about the appetite for Royal Mail?
Well, it's Royal Mail itself, its management, that have been talking to investors. They've been doing that for the last few months. And their advisors, and we have advisors too, that their advisors are telling them that there is appetite for this, and encouraging them to continue to make progress and push on to see if a transaction can be organised during this financial year. So far, the reaction has been pretty positive. Including from private equity firms. And you'll be aware that my colleague, Mark Climb, approached that, reported last week that private equity firms have been approached. Do the public, do postmen, postwomen have anything to fear, do you think, from private equity ownership? I know it's not Plan A, but... No, it isn't Plan A, and it's not Plan A plus either. But you're comfortable with the idea? No, I much prefer, as I said, I much prefer this to be a straightforward public offering, if it can be, because that is the way in which we will trigger the 10% is to go to the staff. Any other route might delay that, might make it more difficult, and you have those who worked so hard to get this thing into better shape, still having to wait for their shares in it. So my strong preference would be to go for an initial public offering, but that will depend. It will depend on continuing progress this year, it will depend on the state of the markets, the advice we receive, and so on. Where do you think public opinion is on this? I think that's pretty hard to judge. When Hasseltine first proposed this, of course, Royal Mail was wrapped up with the post offices, and quite understandably, the public and indeed a number of MPs, if you'll recall, didn't want post offices closed, there were some post offices shut, and were obviously anxious about the implications. What has happened since, is that the business is in much better shape. It's a company now, it's publicly owned, but a well-run company, and it has been separated off, not simply from its pensions deficit, but from the rest of the post office network, where the issues are quite different. So I hope the public will understand a very successful British company that needs more capital now to innovate, to automate, and to grow, and to trigger the chance of 10% of it being in the hands of its own staff. But this 10% stakes being dangled repeatedly is obviously something you think will play, I guess, with postal workers at the very least. Is there anyone here from the union? Anyone? Well, actually, I suppose I'd be interested in that view. But any questions from the floor? If you do have, put your hand up, please, and take your name, and if you could just give us your name and your organisation, and then.
My name is Heather Savory. Thank you. Heather Savory, I chair the Open Data User Group. I'm very interested to hear about the privatisation plans. I'm actually an ex-entrepreneur, so I'm very, very interested to hear about growth, innovation, and I think that a lot of the comments that you've made are actually very good to see a large organisation that needs to compete. The issue the open data community has is about the postcode address file. And so the question I wanted to pose is, we believe, and this will come out in the Shakespeare Review of Public Sector Information, there is £1.8 billion of direct economic benefit, which is underpinned by making the postcode address file open data. And so what I would like to just discuss is to what extent we look at the wider economic benefits of this data. This data is essential to the Royal Mail. They need it to run their business. I'm not questioning that in the slightest. However, if this can be made open data under an open government licence, it will give us opportunities for growth in a sector where we are very strong in the UK and have very good opportunities. Just to be clear on that point, Heather, before Michael answers it, the postcode address file is the file, as the name suggests, which has got every registered person in the country, where they live,
against their postcode. This is the stuff when you log on onto the internet, you put in your postcode and it throws up a name and address. And you want that available freely online.
As open data available to both the public sector and to commercial organisations, because it underpins data services and products. And that means that when the government makes other data open, all this data is publicly funded and a byproduct of the work the government does in delivering its services. By making this open, you are enabling another part of the economy to grow.
Wow, good idea.
Well, I certainly understand that. By making public data available, yes, it helps other companies, large companies, of course, the Googles and the Experians and so on, but also potentially small companies who want to get into the data business. Of course, that's right, and there is an economic benefit from ensuring that data is as widely available as possible. But let's be clear about the postal address file, as I think you've conceded, it is central to the Royal Mail's operation. They're the guys and girls who collect it every day. Thousands of amendments are made as addresses change daily, and new offices are opened, houses are built, and so on. And the issue really is, can we ensure public access to it? And the answer is yes, we can. It's a regulated activity. It's regulated by Ofcom, and it will still be regulated if Royal Mail passes out of the hands of the government and into anybody else's hands. It will still be regulated. The real issue, I think, and perhaps there's some common ground here, is what are the conditions of access to it? And can we make sure, that, in particular, that they don't discriminate against the smaller users, particularly in local markets, who need to be able to get access to the data relatively cheaply. That's the issue, I suspect.
Well, is there, as it stands, is there a cap on the amount of money that can be charged by?
Yes, there's a regulatory regime at the moment, and Ofcom have to be satisfied that the cost of providing the service by Royal Mail is a true cost, and they have a good.
But as it stands, it's still part of the business which is up for sale. Any other questions? At the back.
Chris Hope, Daily Telegraph. Michael, you said in your speech there that you urged the unions to put ideology aside and take up the invitation so that members don't lose out. Are you implying that if the unions go ahead with industrial action in the summer, that might delay or put the kibosh on the whole IPO plan? Is that right?
Well, I'm not. The union is in dialogue, is that the best word, with management on a number of issues at the moment, as you saw from their annual conference last week. And it's not for me to get involved in any of that or express a view on the various points that are in dispute. As you know, the existing pay deal came to an end at the end of March, and there are some issues around pension and so on. That's a matter for management and unions to deal with, not for me to comment on. But as I understand it, it's not so much industrial action as they are going out to ballot on the idea of privatisation. And that's where I think, really, 20, 30 years after the first privatisations, they really need to get away from some kind of tired old campaigning thing against the whole idea of privatisation. This is a delivery company. It's a very successful delivery company. It needs to be more successful on a long-term footing. It shouldn't be a business that has to come to ministers and keep asking permission to do various things. It needs access to private capital and access to commercial freedom. And I would urge the union, given that Parliament has prescribed 10% of the shares, to come and talk to us. Time is ticking now to design the share scheme. If the suggestion is they want to boycott the share scheme altogether, that would be very disappointing. I don't want staff to miss out.
The suggestion
proceed with an IPO this autumn, for example.
Sorry to interrupt, Mike, but the suggestion surely from the union is that actually staff aren't interested in a 10% stake in the company. They want it to remain in the state to be in control.
Well, let's see. Let's see what interest there is.
Just to pick up on this idea, you say it's a tired idea, the idea that the privatisation, you mentioned in your speech, didn't you, the likes of BT, BP, Rolls-Royce, no one questions now things they should have been state-owned. You didn't mention British Gas or British Rail. It doesn't follow that privatisation automatically delivers for staff and for consumers, does it?
Well, I'm not sure. You're right to say it hasn't delivered for British Gas staff.
Well, if you're Sam Laidlaw, it's delivered in spades. But I mean, if you're the average consumer and you're looking at your energy bill and you're looking at the way competition works or doesn't work, and you're looking at the fact that actually we're relying on the French state to build our next generation of nuclear power stations, crudely put, I'm simplifying. But you take my point here, that privatisation of the energy sector in particular has not been terribly successful.
We had one big British gas and we had one big electricity system. Now we have 6 large power companies, lots of smaller companies, access to other supplies through the interconnector with France and elsewhere. We have a diversity of sources of supply, but above all, we have all these companies, private, raising money from the capital market.
You say private, EDF, 85% owned by the French state, able to access capital markets.
Most of the others are private companies who are financing the kind of investment we need in our networks in new generation. They're doing that privately. They're not queuing up at the Treasury behind schools and hospitals and defence for fairly scarce public capital. That's the big point here. They have invested. Look what's happened on our roads. There has been investment. Look at passenger numbers. They have increased.
Asset prices. The point here, I suppose, that I'm getting at is that and actually Centrica, the Centrica EDF example is quite a good one. Centrica, a privatised company, decides it doesn't want to get into nuclear and wants to remain instead with gas, has to make short-term decisions. EDF, 85% owned by the French government, is like as not the company that's going to be making long-term investment in the United Kingdom.
Yes, but it's doing your dragging us into another debate.
Sorry, but I'm making the point.
Let's have another meeting on Hinkley. The point about EDF committing to Hinkley, if we are going to do a deal with EDF, is that they're having to do so on commercial terms. That's the big point. They're going to have to go out there and justify that commitment to their shareholders, which of course includes the French state. You understand that?
Let's take another question at the back.
Becky Barrow from the Mail. You talked about getting good value for money for taxpayers, but there's a reference in the speech to a £1.3 billion cost from the pension transfer to the government this year. Can you just explain who's picking up the bill for the 1.3 billion this year?
The government is picking up the bill for the transfer of the pension deficit, but the sale itself will certainly be seeking best value for the taxpayer, and that's something that isn't simply left to my judgment or the judgment of my advisors. That in the end is something, of course, we have to justify to Parliament, to the Public Accounts Committee and to the National Audit Office, who will obviously look at the terms of the sale, as they did most recently with Northern Rock, and judge whether or not it was good value for the taxpayer. But we are not selling this off on cheap.
Hello, my name's Mario Dunn. I represent the campaign Save Our Royal Mail. We have the support of a number of groups and individuals across the spectrum, both in rural areas, pension groups, small businesses. And I can tell you, Minister, that this is a very unpopular move, possibly one of the most unpopular privatisations ever. As you said, one only needs to look at your energy bill to see that and scratch your head and wonder what the benefits of competition and privatisation often bring further down the line. And that's the issue, is the long-term consequences of this sale. And I want to focus on a couple of points. You raised what you call so-called myths at the end of your speech. I take issue with you on each one of those, but for the sake of brevity, I'm just going to focus on price and rural services.
Could we make these questions?
Well, these are important points to make, and I hope you don't want to start a debate here. Particularly concerned about unregulated prices. As soon as the regulation on first-class stamps was removed last year, prices went up 30%. Royal Mail have been pretty quick at crowing that they had no increase this year, but they increased it 30% last year. Just 2 more of those over the next 4 or 5 years, the first-class stamp's going to be £1. And in many areas that competition element doesn't apply. The other point is on rural services. You do have in place legal protections on the USO, but they are very fragile. I mean, Ofcom have already determined a methodology for reducing the USO and has said, although it's not recommending it at this point, has said that consumers could have a reduced service in rural areas.
Okay, Mario, sorry, did you want to come back on those points, Michael? So about price controls and the service in rural areas.
Sure. First of all, of course, There is no, the price of first-class stamp is not regulated, but that is a competitive market. And it would not be in Royal Mail's interest, presumably, to price themselves out of that market when they want to deliver its services. So that point falls. So far as the universal service obligation is concerned, Ofcom can study and recommend what they want, but the universal service obligation is in here. It's in an Act of Parliament. It can only be changed by a subsequent Act of Parliament. And I don't think there's any political party in Britain that's going to, unless you've got better information than me, that's going to stick in their manifesto. In the 2015 elections, we will reduce the universal postal service. I can't see them doing that. So that is the safeguard. Whatever Ofcom are looking at is in the statute.
Thank you. John Algar from Bright Blue. Michael, how will you ensure that the government and Royal Mail get excellent value for money for its investment banking, advisory and transaction services during the process, whether it goes down the IPO route or the private sale route?
Well, this is going to be one of the biggest transactions that has been seen in this area for a long time. It's going to be one of the biggest seen in the city this year if it goes ahead down that particular route, and therefore there is going to be quite a lot of competition to come in on the banking side, indeed the advisory side, and so on. So we're going to be very, very careful to bear down on the fees, on the transaction costs, and some of the mistakes that were made in very early privatisation. We want to be very clear to maximise value for money for the taxpayer, which is what all this is about.
So you mentioned fees. I mean, UBS has been advising the government for some time, hasn't it? How much has been spent on fees so far, Michael?
I don't know the exact figure at the moment. I'm accountable to Parliament for that. I'm sure we can get you the figure, possibly by the end of the evening.
The other point you mentioned was a sort of you need to get a sell at a fair commercial price. What are your advisors telling you that a fair commercial price might be in the current market for the Royal Mail as it stands?
Well, they're not doing that at the moment. Royal Mail has its advisors. I think your question would probably be better directed to them. They're the ones who've been testing investor appetite at the front line. And I've seen wildly varying estimates being bandied around. I think the truth is nobody quite knows exactly what investors are prepared to pay for this business. Let's see.
But you must have some sort of expectation. So some of the wild estimates. What are the wildest you've heard?
Well, I've seen a range of figures that vary quite dramatically, even by $1 billion or so.
£2 billion is the one that I've heard most frequently. Is that what the Treasury are crossing your fingers or thinking of?
We have not put a target figure on it. This is not about raising a certain amount of money. This is about ensuring that Royal Mail, as I've said repeatedly, gets access to capital, the taxpayer gets fair value for money, and the staff get the chance to get the dividends of them.
And just to be clear on the issue of where the money raised, where will it go? Let's be crystal clear about this. Is it being used to pay down the debt?
Well, the money goes back to the Treasury.
Yeah.
It's a receipt for the Treasury, and that's a matter for the Chancellor to decide how to allocate it during the current year.
Okay. Any other questions?
Yes, all done.
Let's just let this lady in.
Hi, I'm Jackie Taylor. I'm CEO of Flying Binary. We're one of the SME G-Cloud suppliers.
Jackie, so I didn't catch the name of your company.
Flying Binary.
Flying Binary.
And we do data innovation, and we've secured some contracts on G-Cloud for that. And one of the key data sets that the clients need in government is the postcode data. So I want to declare my interest. I'm a Tech City mentor. I mentor the 1,200 Tech City companies. And so I'm on the Open Data User Group representing them and their use of open data. So either as a G-Cloud supplier, delivering data innovation to to Crown departments and arms length bodies via the G-Cloud programme, or as a Tech City company, delivering innovation from both sides. If I look at the 4.8 million SMEs we have in this country, That data is crucial to our growth.
And you presumably you have the same concerns?
But in a different way, from an entrepreneur's point of view. Yes, I share Heather's concerns, and Heather sort of looks at the landscape in a wider way, and I'm part of that debate in the Open Data User Group. But to stand to one side as an SME entrepreneur, driving this growth agenda, our key data set that will drive
Michael made a point earlier that it would be it's regulated, they make sure there was access.
we have 6,000 enterprises that can pay the price. An open data set under open government license will give us the means as digital businesses of driving innovation.
Sort of interesting, how much does it cost currently if a company wants a bit of information on a single postcode search?
It's 5-figure sum at least, and so
5-figure sum for a single.
Yes. So what we do is we illegally scrape websites to get the things we need, because we can't afford to pay as SMEs for that sort of data. Under an open government licence, making it free for all, we could innovate with that data. I spent the weekend in Tech City with 80 IT directors in the charity sector. We have spent six hours by times 20 data scientists scraping data in order to get postcode data to do
Okay, so you're challenging the idea that it's accessible. It's not accessible.
From an SME agenda point of view, I take Heather's point, but we want to innovate in data as SMEs, digital SMEs, and that data set is core to us doing that.
Yeah. Okay, well, where I'm with you is this is not, again, dogma or theology or anything. Where I'm most interested in this is access by SMEs particularly.
Yes.
Of course, there are some very large data companies that would just love to get their hands on this stuff, which of course has been collected at the public expense, and they can afford to pay, and there's no reason why it should simply be handed to them on a plate. I am interested in SME access to it.
Right.
I can't believe it's quite as expensive as you make out, but I'd be very happy to hear from you on the detail of that, because we should be able to ensure that SMEs, particularly in local markets, should not be charged over the odds. But I hope you accept too that there is a cost in assembling this information, that it makes sense for the Royal Mail to continue to do it. What has to happen is that it's regulated and licensed properly under any change of ownership as it is now. I'm very happy to look at the detail.
Can I just say that that's common ground, very much so, and I appreciate that comment. We will innovate on top of that and give that innovation back.
I think he's answered your question, and I'm getting the sense you need to leave soon. And there's another question at the back. I think we've concentrated on this point, Heather. No, please, if we can move on. There is a question at the back, and I have a horrible feeling now it's going to be from a journalist. Is it James?
It might be, yeah. James Ashton from the Evening Standard. Mike, I just want to come back on the jobs point. I think you dodged this one a little bit. I mean, can you get the Royal Mail into shape without compulsory redundancies?
Oh, the Royal Mail has laid people off under public ownership for each year over the last 30 years. Public ownership the staff numbers have declined. I think they were at the peak. It's quite difficult to compare it because you've got to take out BT figures, but I think it's gone down from around 170,000 to 150,000. It's been a continuing
and can you carry that
reduced numbers.
Can you carry that trend down without compulsories though?
That's a matter entirely for Royal Mail and its management, but they have a better chance of doing so if they do have the freedom to invest and to innovate and the commercial freedom to organise and manage their business as they see fit. It shouldn't be something they have to keep coming into Victoria Street and asking permission to deal with.
Does it worry you that in the half year the staff costs actually went up, not down? This doesn't feel like a company that's sort of slimming itself down, getting sort of, fit for the commercial world.
Well, if you look behind the detail of the figures, first you'll see that Royal Mail continues to go through a huge transformation programme, both in the sorting offices and in the delivery offices. But at the same time, the volume it's been handling, particularly on the parcels side, continues to increase, and certainly increased in the run-up to last Christmas, and you would expect some hours to have increased as a result of that.
It does feel a little bit like you're giving them a free pass to hike revenues without really tightening up on the costs. I mean, I know Moy Green gets lots of plaudits, but maybe many people in this room could run the company if you're given a free pass to increase the price of the first class stamp and so on.
Well, first of all, they're not getting a free pass to increase the second class stamp. Secondly, the way of bearing down on costs is through commercial disciplines, through being exposed to the disciplines of the market and being properly compared day by day, week by week, month by month with other operators in the business, particularly as the other European operators, the examples of which I gave. That's the way to bear our costs.
Are there any other questions in the room? We've got time for one last one.
Sure.
Angus Hill from Fleischmann Hillard. Other than your desire for the employee shares scheme, is there any other reason why you prefer an IPO rather than full privatisation, full sale?
Sorry, did you hear that? I didn't quite get that.
Sorry, other than your desire for the share scheme to go through, is there any other reason why you prefer an IPO rather than a full sale?
Yes, I mean there are lots of reasons why it would be my preference. It would involve the public. It would give retail investors the opportunity to own part of a very successful British company, and I think it would give Royal Mail the opportunity to demonstrate to the public the success they're making of the company. It would be a public offering. I see many advantages in that, and it would still be my preference. But of course, it comes with the opportunity to trigger 10% staff ownership right from the front, rather than putting that in place in a few years' time.
Why do you think staff don't seem that enthused about the idea of 10% staff ownership?
Well, I don't think they've yet had the full facts, and they won't, of course, until we take the final decision on which transaction to go forward with. We're able to put a closer idea of the value of the stake that they would hold, and the terms on which they would hold shares, and indeed the cost of those shares, whether they're to be fully priced or discounted or heavily discounted or made available free, until they see all those things.
Which is your preference as far as that's concerned?
As I've said, we haven't taken, that's one of the things I want to talk to the union about. But until they see those kind of details, I think it's quite reasonably difficult for them to focus on the detail of the scheme. But there's a lot of interest in it. Certainly when I've been around my sort of office, I've been asked about it.
Okay. I'm going to end with one last question, Michael. It's often quoted ad nauseum that Mrs. Thatcher said she was not prepared to have the Queen's head privatised. Why do you think she wasn't enthusiastic about a privatised Royal Mail?
Well, first of all, the Queen's head is not privatised. Again, there are safeguards in the legislation about that, so that is not going to happen. I think the reason was simply that it wasn't bound up with the Post Office. And at that stage, of course, it was loss-making. It was not a profitable enterprise. So it wasn't something, obviously, that you could introduce private capital into at that particular time. But as I say, thanks to a lot of hard work and a lot of modernisation, and indeed the changing marketplace, we now have a company, a £9 billion company, a huge British success story that we simply need now to. We need to get away from the ideology of who owns it. We need to give it access now to the private markets, and we need to bind the staff into a decent stake in it.
Okay, Michael Fallon, setting out the government's position. Thank you very much, ladies and gentlemen.